thank you for joining us for this panel on crypto market infrastructure and institutional influence. I know that all of us here have been talking about this topic for a very long time, as well as working behind the scenes to push forward its evolution. But we often overlook that the market participants today are very different from a few years ago, both in terms of diversity, different types of participants, as well as there are many, many more of them. So today I want us to focus on how the crypto markets have changed recently, the role of institutions in pushing forward that change, how that can benefit crypto markets as a whole, as well as the potential change on traditional markets, and all of that, plus a lot of other things that we will no doubt find to talk about in 30 minutes. So no pressure, right? But I'll be fine, I'm Irish, and we talk fast. Now, to do that, I am joined by three people who have each spent years on the evolution of crypto markets, but each from very different angles. I'm joined by Christine Moy, partner and head of digital assets at Apollo Global Management, Mike Belshe, co-founder and CEO of BitGo, and Evgeny Gaevoy, founder and CEO of Wintermute. Thank you so much for joining me for what I think is one of the most important discussions of crypto markets today. So let's open with some brief introductions. I'll start. I'm Noelle Acheson, head of market insights at Genesis Trading, a leading digital asset prime broker. Before that, I was head of research at CoinDesk. I get to spend my days trying to explain market trends to institutional investors, which is, as you can imagine, especially these days, pretty darn exciting. I do have to say that nothing I say is investment advice, and of course, all of the opinions that I do say up here are mine and not that of my employer. With that, Evgeny, over to you.
Yeah, hi everyone. I'm Evgeny. I'm CEO of Wintermute. Wintermute is one of the largest market makers in crypto at this stage, and we've been active for almost 5 years. But my roots are in what we call traditional finance. I was in one of the largest market makers called Optiver before I started Wintermute. And where we are at the moment is we are basically present in anything that trades in crypto. So we are present on all centralized exchanges, on all key decentralized exchanges, and we are very active on OTC front as well, with our institutional clients trading spot derivatives with us and also transacting via our institutional grade platform, Wintermute Node.
Thanks, Evgeny. Christine.
Hey everybody, super excited to be here, and I got my Texas cowboy boots on for the occasion. So I just recently joined Apollo Global Management, which is a $500 billion alternatives asset manager that has businesses across private equity, credit, retirement services, and insurance. And I'll be leading digital asset strategy for them, basically figuring out how we leverage Web3 to navigate the future at large and tech enable all of our different businesses and our portfolio companies, as well as drive our investments in the space. And then backstory, I was at JP Morgan for 18 years, but more significantly in the past half-decade, built and led the blockchain crypto program there, creating new financial products like intraday repo, which has transacted over $300 billion of US dollars in treasuries in the past couple of years, helping to invent JP Morgan coin, and then doing weird things like putting tigers in metaverse spaces, in our JP Morgan lounge.
Yeah, we definitely want to ask you more about that later. Mike, over to you.
Hi, I'm Mike Belshe. I'm CEO of BitGo. BitGo's one of the older companies in the space, been around since 2013. We operate one of the largest wallet platforms that's embedded in a white label way into hundreds of applications around the world. And then also we're a crypto custodian, federally regulated in South Dakota and New York.
Well, thank you. Seriously, that's amazing. Even just listening to the introductions, I'm already thinking of so many questions that I want to add. But before we dive in, I want to get a feel for the room. Who here started investing in crypto more than 2 years ago? Most of you, wow. Who here started investing in crypto more than 5 years ago? That is amazing. So we are dealing with a very well-informed audience of old-timers, people who've been studying the space for a while, as well as, no doubt, very well-informed and open-minded newcomers to the market. We're all very, very glad you're here. So you might have noticed from my accent that I am not American, so I want to have a slightly different approach to how to kick this off. Many panels start with the US Hollywood Bruckheimer strategy of let's start with some drama and build up from there, and Lord knows there sure has been a lot of crypto drama recently, so that'd be a fairly easy approach. But the European approach is somewhat different. The European indies, any of you film buffs will no doubt know this, they tend to focus on something that seems really boring to start with, and then they show how it is one of the most compelling features of life, which brings us to crypto custody, which on the surface seems really boring, and you kind of want your custody to be boring, no drama in custody, right? That's the least thing you need, but it is actually one of the mainstays of the industry, as well as one of the most compelling evolutions that we are seeing today. Mike, I want to start with you. Now, BitGo was created essentially to solve that problem, the problem of the institutional involvement. Back in the early days, not only was crypto custody something very hard for institutions to get their head around, because you can't just ring up your broker and assume your assets are being stored in a safe place, it was also one of the main barriers. Institutions have to take this seriously. And I remember talking to you about this back in the early days, and one thing you opened my eyes to was the technology aspect. Back in the early days, I remember you explaining to me that BitGo wasn't just a crypto custodian, it was actually a technology company that offered institutional-grade crypto custody. How has that evolved over the past few years?
Well, it's evolved a lot, and it's still evolving. Crypto was born without a market structure. Traditional finance is a bit bewildered by how do you interoperate with this market. The fabric of broker-dealers, exchanges, clearinghouses, transfer agents, et cetera, that are well-known and well-versed and have evolved over decades in the traditional world are not present at all in crypto. So who holds the asset becomes a question, and the traditional players, especially in the early days, were not participating. Now, first you look at the technology of it, and securing digital assets is fundamentally different. It's a bearer instrument. We've never seen that before. So you lose your keys, you lose the asset. Imagine your bank losing keys and they just kind of rattle around and your coins just rattle in the bank vault and you can never get them out. So we've never seen that before, and that led to security questions. I think regulators have also struggled. They're trying to figure out what types of investor protections matter, and it's taken a long, steep learning curve to get there. I think what we're at right now is when you're starting without a market structure, regulators that are looking to protect investors can do well by starting with first principles of security. Eliminate single points of failure. Make sure that you have checks and balances between the different parties that are involved in the market structure so that you can't have rug pulls, right? So that you can't have somebody fraudulently accounting for how many assets they have. So you can't have a CEO go off to India and die and lose assets. Anyway, so custody continues to evolve in large part because the infrastructure is still emerging.
And this is where I thought for the regulators trying to get their head around this, again, we kind of want custody to be regulated because we don't want there to be any issues, or if so, there needs to be accountability. And it is, again, it's still an evolving place, very hard for them to plan ahead as well for problems that might arise. Speaking of which, Christine, one of your roles at the moment is to, I guess, help fund the capital markets companies of tomorrow, right? So let's imagine that you have a crypto custody company pitching to you to develop the crypto custodian of the future. What are you looking for? What should the crypto custodian of the future be planning for?
Sure. And by the way, at least by the way that I've seen things be built to date, it won't necessarily come in one neat package. And in fact, I think that a number of the projects and companies that are in the space today are building integral pieces that will one day be put together as the market infrastructure for this market. But I think first and foremost, the main thing is security, right? And I used to joke at the bank, like, what's easier, a bank turning into a cybersecurity company or a cybersecurity company turning into a bank? Neither is easy. But certainly, as Mike said, like being able to protect the keys and secure them and make sure they're not vulnerable is first and foremost like the task at hand. But then from there, there are other things that become important, like being able to make sure the keys are accessible, that people are being able to trade in and out when they need to, or have security. And then otherwise, like, you see like boring things that come up, like accounting and tax and reporting. Like these actually are super integral for the businesses to be able to interact with crypto. But looking forward into the future, I think what's interesting is that we are seeing almost a tokenization of everything. I don't want to be like alarmist or anything, and I know that might sound ridiculous, out of context. But for example, like for those of you that are working on decentralized identity, or for those of you that are working on NFTs, and that being, around like social structure, social clubs, and the like, and then for those of you that are working on tokenizing real assets, like real estate, and which may one day translate to cars, what you could see the custodian of the future being is actually not just someone who safekeeps and stores your financial assets, but actually all of your assets that come in digital form. And what is that? In the future, it could be your identity, it could be your physical assets, it could be your friends, in the form of these like social clubs, like these NFT, like token gated clubs. It could be your memories in the form of NFTs that commemorate your experiences, like in a Pope-like thing. So can you imagine what that custodian, how important that custodian is to not only safekeep all of those, that breadth of range of assets that are important and integral in your life, but also to make it easy to manage and to basically know where everything is, to basically obscure everyone from knowing everything about you. So privacy, and again, back to security will be important. So these are some of the glimpses of the future that I see in what is being developed by companies and projects today.
No small thing, and it also just comes back to the whole technology question. How do you safely custody something that needs to be used regularly, such as identity or some of the functionality of these assets that are emerging? But Mike, do you see traditional custodians as a threat to crypto custody, as beneficial competition, or as potential partners?
It would be fantastic if the incumbents could get into the market. It would be hugely uplifting to our industry. And for those companies that are already in the crypto space, we will adapt and take that on. Look, I think the goal number one for all of us has to be building the plumbing such that it's universally accessible. It's easier to build the retail side, and we saw that come first with digital assets and crypto. But as you start to amass large amounts, if you're running a small business, you need a bank account for that business to pay your payroll and things like that, and make sure you have continuity and whatnot. So we need the institutions to be able to participate, and it would be fantastic if they did. I think what we're seeing, and I say this a lot these days, is an innovator's dilemma problem where, unfortunately, the incumbents can see that they're on the railroad tracks and the train is coming, and they just don't know what to do. We see the same thing in technology, right? So IBM saw Microsoft coming, Microsoft saw Google coming, and yet they both got creamed, right? So it's just the natural evolution. As companies get large, it gets really hard, even though you see the new technology coming, to actually adapt and get there. So I'm hopeful that they will, but I think history shows that actually they probably aren't, and we're probably looking at a better thing, which is we will see a wholesale replacement, and we will see better services, we will see more transparent services, we will see less risky services, and we'll all actually have a much better financial system.
Again, that's fascinating parallel to the technology development. I mean, we've all heard it before, but the typewriter companies wouldn't be able to develop a word processor. It's just not in their DNA. And speaking of DNA, Evgeny, I mean, market making is the DNA of any market. It's what provides the liquidity for it. And Wintermute is one of the leading market makers in the space. But market making is market making, right? It's liquidity is liquidity. Is that true, or is crypto market making different?
I would say what's one funny thing about crypto in general is, well, people say that it's all about trustless systems, but in reality there is a lot of trust going around, and especially when it comes to market makers, there is a very, trust is very important, and it's very unlike the traditional markets actually, where trust is pretty much governed by, legal contracts and the like, while in crypto it's, you need to trust your market maker, to do what you need them to do, like providing liquidity on your exchange, providing liquidity for your token, but also potentially guiding you in how to approach custody, how to approach OTC trading, how to manage your treasury event. And so the role of market maker is much more, much wider. And you also see a lot of market makers, us included, being at the forefront with venture investment into the space as well. So I think it's kind of like reimagining of what market maker can be from what they are in traditional space.
It's one of the things I love about this industry, as we saw with custody and now market making, it's redefining these concepts, which in the end, in my opinion anyway, will end up having an impact on traditional markets. But Evgeny, Wintermute is not just a user of DeFi platforms, you're also a well-known investor in DeFi platforms. Do you see DeFi services as a necessary component of crypto market making, or as a nice to have?
I would say with financial services being still the main application of blockchain, it would be rather sad if basically those decentralized protocols that focus on, decentralized exchanges, for example, if they don't pick off, because that kind of signals that the whole technology is maybe not as successful as it used to be. So I think it's pretty integral for all those DeFi applications to succeed, because otherwise, what are we doing here?
That's very, very true. Christine, do you see institutions using DeFi now or in the future even?
Now, definitely no. But if you are, let me know, because I want to know how you're doing it. But in the future, yes. And, I always like to say that DeFi is actually like a really interesting place, because it's kind of where you can see the future, right? I mean, the future is here, but it's not evenly distributed. But, basically, the way that DeFi protocols can do all the things that traditional institutions can do, like market making, lending, borrowing, managing fund shares and positions. This is incredible that you can do this with just a few lines of smart contract code and a very low cost basis, if not a zero cost basis, right? And these are functions that legacy financial institutions perform, but they have multiple tech systems to support it. They have multiple teams of people that support these functions, not a zero cost basis. So, at some point, not now, because A, the technology is still very early stage, and B, the regulatory framework around using these technologies is not incredibly clear. Not now, but in the future, it may become existential for traditional financial institutions, because essentially, if you put like a neobank or a broker-dealer, consumer-facing broker-dealer on the front end, and then you have DeFi in the back end, what people like to call the DeFi mullet, then basically you have a real competitor to traditional finance with a better capital structure and cost base than what is being run right now. So yeah, I think that traditional finance is going to have to evolve and figure out how to adopt these protocols. And I think that the first juncture is going to be about curating the right protocols that actually make sense and work, battle testing them with real money, getting smart contract code audits to the moon, and then perhaps being the front end facing to the consumer or to the institutional trader with the proper licenses, but just using it as sort of the back office. In some ways, it's actually enterprise blockchain dreams come true. Some of the things that me and the team started working on many years ago, which was, can we use smart contracts to help with more efficient settlement and to transfer value seamlessly, 24/7, 365? Yes, we can do that now, except that now it's being built outside of the existing financial system. So in that way, it just seems more threatening because legacy systems tend to want to have control over these type of things. So. Yeah, I would see that traditional institutions, some of them will have to be driven to evolve and use them in the future, in some form.
Especially these days when traditional finance is seeing threats come at it from all angles. And Mike, speak for you. Christine mentioned a fundamental part of DeFi, which is the relative ease with which it can be spun up compared to traditional services. Do you see that more as a threat to traditional finance or more as an opportunity?
It's probably more a threat. Look, I think the existing system was built in a very manual way because we didn't have technology that could streamline all these processes. And then it turns out, when it comes to money, humans aren't very nice. Humans tend to cheat. They tend to steal. And even if you might have an honest person today, he might get into difficult financial situation tomorrow and start cheating his clients. And this is why FINRA exists, to monitor every single message that goes through every broker-dealer. Imagine the regulatory that could be just like eliminated with a smart contract. So, market making, and of course, Evgeny is the expert here on what goes into that, but a lot of it is algorithmic, even in the traditional firms. They just have a lot of capital and a lot of regulatory clearances around it. If you put that all into a smart contract, maybe your regulator reduces to a code reviewer. And so he also becomes somebody that's providing security to the system. Now, this is going to be difficult for incumbents, both on the financial services side as well as incumbents in the regulatory side, to swallow. But frankly, the computers will do a better job at it. They will do it more reliably, they will do it more transparently, and ultimately that means less risk.
And the transparency is totally key, and many of us can get very excited about just what the access for smoother regulation based on data could do. And I don't know if there are any regulators in the audience. Again, you're probably quaking right now because we're also asking you to to allow your competition to come in and take over your job. So again, that makes it somewhat more
Hopefully
unlikely.
regulators don't feel competition with technology, right?
Hopefully, and adapt. There's new opportunities.
I feel like dereg protocols are going to be like a thing. So regulators in the room probably just be doing like the DeFi version of regulation.
And hopefully be incentivized by just the access to data, which right now would make any regulator or even politician or even someone developing services absolutely drool. But this is the institutional drive that we're seeing. And Evgeny, something for you. Those of us who've been looking at the space for a long time will remember back in the early days, I started covering this in 2016, all we heard back then was the institutions are coming, and then they didn't, and suddenly they did. And so we can now, I think, comfortably say that yes, the institutions are very present in crypto markets. And what have you seen on that trend, and how do you think that has benefited crypto markets?
I would say it's still a bit far from saying that they really are here with us. So there are a few institutions that are getting much deeper, but I would say 95% are still on the sidelines waiting, for example, for custody solutions to emerge and not necessarily being comfortable with them. But even though they're here, but they probably just waiting for the traditional custody solutions to somehow fit crypto into the current system. But I think it's impossible at this stage. So I think once they get more comfortable with what's out there, I think we will see much more adoption. But at the moment, what we see is this adoption drives quite a bit of innovation on, for example, KYC ML side. It drives some adoption on basically just being more compliant primarily for centralized exchanges, I would say even. But also for some DeFi protocols, with them basically thinking, okay, can we potentially create a walled garden solution that will cater to those institutions like Ava, for example, is doing?
Interesting. Christine, your previous role was with a legacy financial institution, a pretty well-known one, after all, and yet you found yourself releasing tigers into the metaverse. What's your take on institutional involvement in crypto today, and where do you see it heading?
I think that institutions at large have now recognized crypto, blockchain technology, as DeFi protocols as something to be reckoned with, right? I think that there was a few years that we went through as some of the old people here, where it wasn't entirely clear to anyone who was outside the space that it would continue going, right? I remember there was even a point in time in 2017 or 18, someone would be like, hey, so this blockchain thing, is it over? Do you need a job? Maybe you want to do some fintech? And I'm like, nah, I'm good. I'm all in, we're doing this. But that's what I mean. If you weren't in the space, you just thought it was canceled. But little did they know, and obviously it all came roaring back in the past 18 months, and now it's gotten to a level of retail and some level of institutional adoption where it's undeniable. And so, I think that in all of the leadership suites across all of the legacy financial institutions, this is a top priority topic on how do we mobilize against this or mobilize with this. How do we evolve? What do we need to do? What is the talent we need to put into place? What is the software we need to integrate with or build? What are the partners we need to find and work with in order to be prepared for this future? So, I think, there's definitely broad recognition of this space, and, it's quite cool, right? Because like five or 6 years ago, like I said, it was like a smaller room, and we were all working on seemingly what we thought would be the impossible. And every year, the impossible happens. And I mean, that's what makes crypto life a little bit absurd, because some of the things, like the crazy things that you don't think will ever happen, actually start happening. And then you start thinking like, oh wow, like I'm actually at the foot of changing the world. And so, yeah, yeah, it's like a thing. So anyway, to answer your question, yes, they know about it and they're working on it.
Just your average day in crypto. Now, I remember back in 5-6 years ago, as you mentioned, the institutional involvement was basically limited to, do we invest in Bitcoin or not, and if so, how much? That was it. Those were the options available. And today it is a fire hose of innovation and complexity. And all of us here are working to help push that complexity even further into the institutional realm, which is going to have impacts on traditional markets in ways that we are not really able to see. But since we are almost out of time, I do want to ask each of you what your wish list, what you would like to see in the institutional crypto overlap over the next 12 months. Evgeny, start with you.
Yeah, I'd say my main wish would be that institutions just play around with DeFi especially much more. So like just to see them dip in their toes, trying to take a loan or transfer stablecoins around, like as simple as that, and basically trying to understand, finally hopefully realizing that, this is the future and this is something that will definitely disintermediate a lot of stuff, but it's also a massive profit opportunity for them. And I think the challenge for them as well is, if we have another like small or maybe not so small bear market in our hands, like a lot of them might delay this decision, and then it can prove fatal for them going forward.
Do you think the bear market is influencing institutional plans?
I think it's quite possible, yeah. I think we've seen it back in 2018 already, that like potentially a lot of institutions were ready to go into space, and then they decided, okay, it's canceled, and let's wait again. And I think it will happen again now, probably.
Put a pin in that. Yeah. Christine, what's on your wish list for the next 12 months?
My wish list for the next 12 months? I mean, listen, the next 12 months, I'm going to keep it real, from a macro economy perspective, is going to be really tough. This is not a crypto thing, this is like a global markets thing, as the Fed is battling inflation. And so my wishes for the next 12 months is for all of the builders and traders and all of the ecosystem out there, all of the people who are in it for the mission and not just for the money, that you guys survive. So that you guys take care of yourselves, you take care of your teams, you are fiscally responsible, and that you survive what could be an extended crypto winter, and that you come out the other end being the biggest successes or being the core parts of the infrastructure and business ecosystem that we see on the other side, however long that may be. So that's the only thing I can hope for the next 12 months.
Economic survival is totally key, but also in tough times, psychological attitudes matter a lot, and we all know that when the going gets tough, the tough get building, right?
That's right.
Mike, what's on your wish list?
We have a bit of an institutional fight, I think, about the future of money. And money itself is a tool. Capital markets are tools. These should be built to serve us, not to serve other people's financial pockets. As the regulators are looking for what to do next and how to manage this, it's a hard topic. It's complicated. There's a lot of parties involved. I would hope that institutions get a little deeper, think about what are we trying to accomplish here for the long term in terms of building a financial system that won't have a great financial crisis again, a financial system that is immune to massive money printing at an unprecedented rate just because we have a pandemic or whatnot. So, there's actually a lot of credit has to be given to the faltering of the existing system, which gave rise to crypto over the last year and a half. It did us very, very well. It served as an example, proved some points, more of that's coming. Anyway, I hope institutions embrace, what are we really trying to accomplish as opposed to what just makes money.
I totally love that you said that. The reason I'm here is because I care about capital markets, and I do see crypto technologies and attitudes and opportunities as a way to bring capital markets back to the opportunity role that they are supposed to, the open access, the the innovation. I want to thank you all so much for your time and sharing with us today your thoughts on the institutional impact in crypto and where it's going. Thank you all for joining us today, and I hope you enjoy the rest of the event.